Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Is growth by M&A becoming a thing again? I'm Paul Harris for Kitco Mining here at the 2024 Precious Metals Summit in Beaver Creek, Colorado. And joining me to answer this question is George Salamis, Executive Chair of Integra Resources. George, welcome back to Kitco.
Great to be on again.
Now, the gold price has been at historically high levels for quite a while now, quite a few months, yet the share prices of companies, market capitalizations of many juniors hasn't been going up as perhaps as much as people would have thought. And yet there hasn't been a lot of M&A. There haven't been a lot of companies, bigger companies, taking advantage of the weakness of smaller companies. You've done a lot of M&A. Why do you think that is?
I wake up in the middle of the night. I think a lot about this question, Paul. What's with the disconnect between gold equities and physical gold? Why isn't that translating into everything that we do? Certainly in the pre-development space, in the development space. And when I look back over the last 20 years in the handful of M&A deals that I've been part of, there's one commonality, which is the buyers of the assets that we, the pre-development companies, put together in advance. That only occurs when the buyers are feeling good about themselves. They're feeling good about their balance sheets. They're actually making cash. If I look back to the points in time when that has occurred, it's come out of a low when even the producers themselves haven't been making a lot of money themselves, haven't been feeling good about their balance sheets, about their own share valuations. When that starts to change is when I recall M&A season kicking off. It's kind of one of the driving factors that I see.
Okay, this year, looking at the share price changes year to date, it's very noticeable there's a huge range amongst the gold producers and developers. Some companies are up 50, even 100%. Some are up single digits. A few are negative year to date. Presumably that gives the companies that have had experienced that share price appreciation a lot of potential leverage to use their paper to transact. We perhaps saw that yesterday with AngloGold Ashanti buying Centamin. AngloGold Ashanti is up 60%, give or take year to date. Centamin only 20%. Given that there's those vast disparities, will that fuel more M&A transactions?
Well, it should, and typically it does. When the producers start to again feel good about themselves and their own balance sheets, that's typically when things start to happen. And we're seeing it. I think the deal you just mentioned is a perfect example of that. Usually kicks off M&A season in our view. From an investment perspective, I poll a lot of people at this conference and sort of try to gauge, what the disparity between actual equity valuations and physical gold is all about. For this sector here, the pre-development and explorers, it's all about, M&A speculation. That's really what drives their valuation ultimately. And so we need to see more M&A in order for that to occur. And I think we're in the early innings of that happening, coming to pass.
In the gold developer space, realistically, there aren't that many companies with projects with large resources. And by large resources, I'm thinking 5 to 10 million ounces. Recently, we saw another one of those disappear with Goldfields buying Osisko Mining, taking Windfall out of the equation. Again, do you expect that to be a driver? Because there are so few of these 5 to 10 million ounce deposits, is there a danger of mining companies having that sort of fear of missing out, of being able to add to their pipelines?
FOMO, yes, yeah. Indeed. I think that's a big driver. When I used to work for major mining companies, FOMO was a big driver for what we used to do at Placer Dome, for example. If Barrick went out and bought a producing company or a development company, well, we felt that we had to move on something as well. And I know that that's repeated over and over in the halls and the boardrooms of major mining companies. So FOMO is a factor. For sure. I think as well in terms of in the pre-development and development space, I think permitting is also a big factor. I mean, one of the things that we used to do when I used to work for major mining companies was we would wait to see what stakeholder sentiment was through the course of permitting. Is there going to be a lot of pushback on this project, or is it going to sail relatively easily through the course of permitting? And I don't suspect that that's changed. To your point, there are not a lot of companies that are going through permitting right now. There are a handful. We're one of them. Integra is one of them in the Western U.S. and there are only a handful in Canada. So, when it comes time for the majors to turn on that switch, that M&A switch, there's not going to be a lot for them to look at ultimately.
In terms of the FOMO, I want to sort of dig a little bit deeper on that, because also this week we've seen Kinross Gold put out a preliminary economic assessment on the Great Bear project in Ontario in Canada, which they bought a couple of years ago. At the time, a lot of people in the market thought they overpaid for a pre-resource company, pre-resource junior. When they came out with their initial resource estimate, the market was pretty much underwhelmed. But the PEA they brought out this week, the market seemed to really like it. Their stock was up, Kinross stock was up 5 or 6% on the day. Will that again stoke the fear of missing out? Barrick Gold was reportedly very close to pulling the trigger on buying Great Bear Resources. It didn't. Will it rue that decision?
I think it will rue that decision. If I was a senior executive at Barrick, I would be feeling a whole lot of FOMO right now based on what we just saw in that PEA. Albeit it is a PEA, but it's a Kinross PEA. It's not Moose Pasture Junior XYZ who's doing a PEA. This is a Kinross PEA. So one can presume that it was done well, and no corners were cut ultimately. So FOMO again is going to be a big driver. And those who are looking at being a competitor to Kinross and Great Bear should be suffering FOMO right now. That's an amazing asset.
It's interesting your comment about the sort of permitting aspect, because again, going back a few weeks, when Goldfields made the acquisition of Cisco Mining, other gold developers, they all sort of jumped 10, 15%, Skeena Resources, Perpetua Resources, and a couple of others. The market thought, okay, it seems the game is now on again.
Yes, well, correct. And the landscape of investors who come to this conference, I know that they have a matrix that says which one of these companies that I'm talking to that's in a pre-development mode is closest to the finish line on permitting, and they all have their views, 1, 2, 3 years away, and all of the companies that you were talking about, be it Perpetua, be it a Cisco Mining, they were already permitted, or in fact maybe a year away from permitting, and those are the companies that I think are of maximum attraction to the majors and the buyers of those assets ultimately.
Let's speculate a little bit, George. Is there an M&A transaction that you think absolutely should happen, makes a lot of sense?
Oh gosh, is there? So I can comment on one that I've been thinking about for a long time, and it actually came to pass, and it's one because I am personally, and we are as a company fairly close to Alamos. Alamos are about to become a major shareholder by way of the Florida Canyon transaction through Argonaut. I was a director of Magino and that asset at Magino through Prodigy, and that's one that I certainly looked at and I said, wow, this is something that Alamos have to own. It's right next door. It's the same ore body ultimately, and I recall really putting in front of John's team and saying, hey, you have to buy this. This is the same ore body. He waited, and in the end of the day, he won with patience. So that was a great transaction. That was one that I was pounding the table a lot. I can't think of any other ones that are quite as compelling as that one. They're certainly out there, though. Sure.
There's going to be tens of millions of dollars of saved infrastructure spend on that, and extension of mine life and all kinds of things. Now, George, you've been involved in a lot of M&A in recent years through Integra Resources. The industry's been calling out for consolidation. You're one of the few people that have done that. And yet, I think it would be fair to say the market hasn't really rewarded Integra for taking those steps, for doing that consolidation. Why do you think that is?
Well, and again, another one of those questions that I ask myself in the cold light of dawn. Yeah, when I wake up in the morning and I think about these things. The first bit of consolidation that we did with Millennial was I'm going to say driven for the purposes of getting bigger in scale and hopefully attracting a larger investment audience. Also, what we were hearing and following the demands of our institutional shareholders, they didn't seem to want, to own 100 of us. They want to own 50 or 25, making life easier for them. So those were two of many driving factors that went into that. The market did not reward us for that transaction ultimately. I think if somebody was to do that today, they would have to say, well, we're doing this to prepare for the next big rally. I think ultimately the transaction that we did with Millennial will pay dividends in terms of the ounces that it brought on in a tier 1 jurisdiction in Nevada, looking at low-cost heap leach assets that came with the Millennial transaction. This transaction that we are about to complete with Florida Canyon via Argonaut, this is a different kettle of fish altogether. This is bringing on production, and it's production that we can point to from a cash flow perspective to say, theoretically, we won't have to come back to the market ever again until we need to finance DeLamar, which is 2 to 3 years away. And that's why we looked at it.
Now, that deal seems to be a very good one for you, both for the reasons you've outlined, but also on the sort of relative prices. You know, a lot of people think you're getting the better deal than the Florida Canyon shareholders.
So the driving motivation, what I understand, that drove Florida Canyon board management and shareholders in our direction was the concept of the re-rate. What does this asset look like in the hands of someone else versus in the hands of Integra, who's best suited to take this on because we have development assets that are so close to Florida Canyon. The re-rate that comes with our now ability to point to a mining workforce of 260 people who are skilled at heap leaching, and we can point to them and say, well, they've done it before, they've been doing it for a long time. They can do it again at DeLamar, they can do it again at Wildcat. We can take those synergies. No other, to our knowledge, competitor out there offered that kind of synergy.
I think that's perhaps one thing that's maybe lost on people. You know, DeLamar's in Idaho, Florida Canyon's in Nevada. People think they're separate, but realistically, they're only a few hours by road.
Yeah, correct. Similar style of deposits, similar age of deposits, lots of similarities, similar geometries, all of that stuff comes with this transaction.
Now, we're at a mining investment conference, and one of the things I'm hearing a lot is, although gold's at $2,500 per ounce, there's very little money available for the junior explorers to raise. There's very little interest in them. It's very difficult to raise money. Will that stimulate more deals?
Well, it should, theoretically. If I was running a PE fund, for example, and I had access to a lot of capital, there are a lot of assets that I would be acquiring right now and maybe taking them private until the market really starts to gather steam. I did some rough calculations, maybe 6 months or more ago. For the cost of maybe $300 million, one could acquire 25 to 30 million ounces in the Great Basin, in a tier 1 jurisdiction, low risk jurisdiction like that. I mean, you're never going to get bargains like that. And I think this is a time when PE funds should be taking advantage of this situation.
Going back a cycle or so, that's what Waterton Global did, wasn't it? They bought up a lot of mines in Nevada, and they've subsequently been selling those off and presumably doing quite well at it.
Brilliant strategy.
Yeah. Okay, some very positive news out of Idaho recently, where your main project is, with Integra Resources getting a draft record of decision from the U.S. Forest Service, which, my understanding, is not necessarily the easiest federal agency to deal with for their Stibnite project. Are you going to be next to get your permits?
Well, we certainly hope so. We're certainly the next sort of cap in the rank, so to speak. If you look at the trials and tribulations that they went through them because they're in a complex geographic location, which we don't have those issues. In the end of the day, all that hard work is seemingly paying off. I think the fact that they have a critical metal, antimony, as a byproduct certainly accelerated their permitting iterations, and good on them, because it is, Paul, the first question that we get asked in any interview with any new prospective shareholder: tell us about Stibnite, tell us about Perpetua. Why is it taking them as long as it has? And that's when we have to spend half of any sort of presentation session describing, okay, well, this is Perpetua and Stibnite, this is Integra and DeLamar. Two different jurisdictions, two different permitting agencies, complexities, and we now hopefully will no longer have to do that.
You don't have the fish habitat issues that they have.
No. High, dry, semi-arid desert, southwestern Idaho. It's totally different. Okay,
you said you're very close to closing the Florida Canyon transaction. What do the next 6 to 12 months look like for Integra Resources?
For us right now, it's all about transition, and execution. As you know, many companies who have gone from exploration or pre-development straight into production have stumbled. And so we're trying to ensure that doesn't happen by managing the transition correctly by ensuring that we've deployed the right people and the right skill sets to the right places. And just getting the two teams together to get to know each other. That's a big part of what we're doing right now, spending a lot of time on that.
Okay. And how do you think the rest of the year will play out in the gold space?
In the gold space, well, for us specifically, obviously we closed the transaction. I think the eyes will be on us from a quarterly production guidance perspective. We won't give guidance, obviously, until next year sometime. But I think that there's going to be a show me aspect to those who look at us. In addition to that, sometime late this year, early next year, we'll be looking at putting out our feasibility study in DeLamar. Obviously using a lot more resource and reserve than we did previously, so that should be a great number. So lots of news for us. In terms of the rest of the gold sector, I think there's going to be more M&A. Hearing a lot of chatter on the street, which is a good thing. I think a healthy gold price. I think the U.S. Election outcome, no matter who the new administration is going to be good for gold regardless, because you can hear the printing presses spinning up regardless. So I think everything's looking great for us in this sector.
Well, I'm looking forward to Integra Resources becoming a gold producer. George, thank you very much for joining us today.
Thank you very much, Bob.
And we have a lot more to come from the 2024 Precious Metals Summit here in Beaver Creek. Don't forget, if you like what you see, don't forget to subscribe. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.